Good early afternoon, late spring, mid-May, gorgeous, sunny, not a cloud in the sky, crystal blue skies, day in central Illinois in the greater Bloomington metropolitan area. This is Vincenzo'S Gold Crypto Investing, where you come to get a one-of-a-kind, company-made, state-of-the-art, probability-based, price-predicting trading alerts. And what I did for you, my audience, my new audience, my growing audience, when you like, subscribe, and share, and hit the bell notifications on the bottom of the page, my 77 subscribers, I went in, and oh yes, I found a monthly pattern. Look at this. But before we look at that, let's look at our new audience. The United States losing some market share to our up-and-coming, hottest traded group in viewers, the United Kingdom. Welcome to the United Kingdom. We love you. Malaysia losing a little bit of market share. They're at 1.2% of the market share yesterday. They've fallen a little bit to 0.8%. Welcome, Malaysia. We're going to look to heavily promote in the Malaysian audience to try to build that, but welcome. Everyone give a 77 subscriber welcome to the Nigerian audience. They have taken up and exploded into the market share at 0.6% of the market share. And then 53% other, we don't have enough data on them to figure out who they are, but we look to continue to grow this market share and expand our reach at Vincenzo'S Gold Crypto Investing. Now back to Doge, everyone's favorite fucking Doge coin. Can you fucking believe that this guy found me a weekly time frame pattern? That's what I did. It's a weekly time frame pattern, and like I always say, you start out so you know where the pattern is coming from, and then you move in to the earlier or shorter time frames so you can try to see and forecast where the pattern's going to go. See how that works? Start out, work your way in. Very simple, very easy. But we think we might be, maybe, potentially, and what helped us, if you like and subscribe and go watch the video from last week, it's almost approaching 100 likes. And if we could get our 100 views, 100 likes, holy shit, I'd have to give somebody $100. If we could get my first ever video to 100 views, go back last week and look at the Saturday Night Live call emergency Doge video where I called the Saturday Night Live crash, and I'm going to show you the method to my madness on how I could figure out forecasts of very unpopular opinion and forecasting a Saturday Night Live dump when everybody else is forecasting a pump. You can see we're forming a spike in volume and then an upwards channel. It's a rising channel. It can be bearish or it can be bullish. But you see how we have the candle wicks and then the high candle wicks? That means there was heavy sell pressure somewhere in the weekly time frame after you made your high, big body, and then big wick at the top. You have big sell pressure. And then you have falling volume. Remember I always say look at the volume? Falling volume and rising after a pump can be bullish. But when you have falling volume and then pump and now a sideways and up consolidation, we always tell you at this channel, if you've paid attention and you are a subscriber, you should know. You should already know to look for this. If you ever are seeing a pump and you're wondering if it's going to continue pumping after it starts slowing down after the initial pump, if the volume falls and the price consolidates down, that's bullish. If you have a pump and then the volume falls and you have an up and sideways consolidation, that's very bearish. That's saying the price is being exhausted on the run, the buyers are being exhausted, and the momentum is dying, and the price is going to probably roll over on itself at least a little bit. And that's how we call that Saturday Night Live. If we zoom in now, like we always say, zoom in, move into the daily time frame, you get more data points and you can see what we're talking about. So when we see where we're forming, we said pump, see that? Pumping volume, good. Then we crashed in volume. And we started off good, down and sideways consolidation, see that? After the pump, that's a down and sideways consolidation, bullish, right? So now we knew we have a top here of some kind of overhead resistance, and then we had that 2 weeks ago where Bitcoin crashed 28%. If you go check out our video, we had an emergency Bitcoin video, rising wedge pattern in the weekly time frame being exhausted. And we put critical alerts where if it crossed, the Bitcoin price would crash, and it ended up crossing that, and it ended up bringing the whole crypto market down with it. But you had a 28% flash crash in Bitcoin and 50 and 60% flash crashes in other weaker coins, right? But check that video out. It's got a lot of love, a lot of likes, a lot of shares, a lot of comments about our ability to forecast that. I would highly advise you go take that out. I'm not a financial advisor, nor do I play one on YouTube or Facebook. This is for entertainment and educational purposes only. So now we see that we have resistance, flash crash that we called, if you check that Bitcoin video out, first support now in our rising channel, and then a slow pump, and then we hit this, and this right here leading up to Saturday Night Live with one of our rules that we have: buy the rumor, sell the news. So we have buy the rumor, sell the news rule there, check. Then we have up and sideways consolidation and price with falling volume. You see that? Falling volume, right? You see that? Upwards and sideways consolidation and price. I mean, it's a big pump, but in the daily and weekly time frame, when you see those two things, that's rule number 2. After a pump, sideways and up consolidation with falling volume, bearish, right? Bearish. Buy the rumor, sell the news, bearish, right? Then we move into the 4-hour time frame. See how easy and simple this is when you break it down from looking at it from where the pattern was coming from in as far out time frame as you can look, and then you zoom in. So now we go to the 1 minute time, or the 4-hour time frame, and this all right here gave us an indication that every time the price in the duck peaked over that heavy overhead monthly resistance, it got shot down by the duck hunter. Because like I told you in our prior videos, the duck hunter is getting smart, and then they peak, duck dead, ducks reload, shot, multiple ducks dead, son dead, you know. So we knew that. Then we go into the 1-hour time frame. See, that's very simple, easy steps to understand the chart, and that's what at Vincenzo's Gold Crypto Investing we're here to do, to make it simple and easy. Now, if you look at, back to the 4-hour real quick. If you look at the 4-hour, you see as it started pumping, if you want to do a 4-hour time frame analysis, you've seen our double bottom, which can be bullish. Our underneath support can be bullish in a pump. But as it hit, you see this wick up there? It got rejected by that orange line. And you say, what the fuck is that orange line? That orange line's the fucking 200-day moving average. And those play very key to the price. Now, you see that. All right. Now I'll go to the hour time frame. Oh, look at that. More data points. Beautiful. Beautiful chart, right? Look how beautiful that is. Sexy chart. Now you can see that wick. See that? And then the blue is the 50-day moving average. And you can see where it's fighting the 50-day and the orange, the 200-day moving average in a sideways consolidation. But the volume is still crashing. So that's bearish. So I drew out now, if we move back out, after you see, this is a quick video. I'm at work right now. If you like, subscribe, and share. Look what we got up there. We got some bullshit going on in sports. Nobody cares about that here. But I drew two things that could happen to you. So here's what you need to look for. Volume picking up if you want to be bullish. The blue mark is the bullish thing. You can come down, crash here a little bit. By crash, I just mean a big percentile loss, 6-7% real quick. Touch for the 3rd or 4th time. If you look down the line, we had an earlier touch on the support line, but it's a light to moderate support because it's not a heavily traded, because the price has never been up here. It's only been up here for a few days. But you could hold support and then pop, and then you would stop right here. See on the left, you're hitting overhead resistance. Then you would come down and then hit back the 200-day moving average, and then bounce, and then quickly pump up here. And now this is still your long-term overhead resistance that the duck has been getting shot down back here to the left that I just showed you in the 4-hour time frame. The duck hunter keeps shooting down the ducks as they peek their heads over to try to get to freedom and the targeted move where all the food is at, but they keep getting shot in the head and bam, dead, son, dead. Now, option 2, that my bullish short-term traders will not like, my long-term hodlers, none of this really applies. You're just trying to pick strategically placed educational buy areas to snap up and average in your position at the cheapest possible price. And then you just hodl. Now, the second scenario looks like the first. It comes down, it tests, and it pumps real quick. Get a quick spike in volume to buy some people. And oh my God, we're going to the moon, baby. We've triple supported. We're done. And then bam, gets hit against the 250-day moving average and then crashes, right? And comes down to our yellow line, which our yellow, what the fuck is this yellow line? The yellow line is our underneath support in the monthly time frame. And then you bounce off that, yeah, baby, back to the moon roller coaster. And then bam, crashes down to our ultimate target, right? So those are your two choices. And if you're buying and selling, and you get bad advice, here's what happens. I'm going to demonstrate what happens for you real quick. And it gets entertaining. And then I got to go because I got to go back to work. You start and you go, all right, bam, it bounced. I'm buying heavy, baby, heavy. Oh, it's crashing. Sell. So you sell here. And then it comes back up and you end up buying right back into it, a little bit above or a little bit below where you did, but you're paying taxes, buying and selling, paying taxes. Robert Kiyosaki slapping you in the face. Peter Schiff's laughing at you and then bam, it crashes. You're like, oh my God, it's crashing. Sell. I only lost 4%. I don't want to lose 30. Then bam, it comes back up and hits overhead resistance. Buy. Now you just bought 3 times in the last 20 minutes and you lost 2%, you made 2%, but you paid the fees. The fucking fees. You're a mess. You don't know what's going on. Bam, it crashes and you're jumping out of buildings, committing suicide, have no idea, you're confused. You're just all confused. Why are you confused? Because you don't have a plan. What do you need? A fucking plan. And I've laid out here for you in simple, easy to understand steps to trade this. A quick overview at our weekly pattern, a rising channel, which can be bullish or bearish, but it led us to be able to call that Saturday Night Live crash beautifully. A very bold prediction. Not many called that. And that's what we're in now. Like, subscribe, and share. Peace and love. For the love of God, save